traders, welcome back to another video going through the markets, talking about setups and ideas for the next few days. We're going to be talking about gold here, we'll talk about indices, commodities, everything currency wise as well. So stick around to the very end of this video. Got a good one for you today as things are really heating up in the second half of this year, maybe marked highly by this move in the VIX. And I want to talk about this first because I know not a lot of people, obviously most people don't trade volatility that watch my channel, but volatility is definitely worth watching. And I would encourage you to add this to your watch list on your trading views or whatever you use to chart, because volatility has jumped up a lot in the last week or two. In fact, we've seen, the stock market sell off, which is usually accompanied by a spike in volatility. But today, volatility is falling hard because of a little kind of news event that we had over the weekend, which was that Joe Biden had dropped out of the election. And now the Democrats are kind of coming together to try and figure out who's going to be their nominee. And the Republicans are looking in a good position for Trump to potentially take the election. Now, I bring that up because it does have a lot of implications on the market, and I've been prefacing my videos with saying I am not a professional in government or fiscal policies or anything like that, but I'm doing my best here to cover how it could impact the market specifically, as that's something that we all share in interest on this channel. So let's jump into everything happening right now across the board. We can see that stocks are up today. We have the S&P 500 finding support around that 5,500 level, let's call it 5,520, let's call it. And the NASDAQ also making a good push as well, which I am personally long on. We'll discuss that in just a moment. The Dow Jones pulled back, didn't quite get to this level of support, but finding some buying already. We'll see if that persists or if this does roll over and retest. We'll talk more about that in just a moment. We've got the Russell up on the day, and you've got things like gold, silver, and oil down. And we're going to discuss this because commodities moving lower today is kind of an interesting story that I want to get into. We also see yields down overall. Bitcoin and Ethereum are down. And on the currency front, we've got some interesting moves to discuss as well, specifically the dollar being flat, but some other currencies making moves. Let's start out today by taking a quick look at the S&P 500. But before we do that, let's not forget that we do have some fresh commitment of traders data to go through. And if you don't know what the commitment of traders data is, it is a week-to-week filing by institutional money, what they're buying, what they're selling, and we've got all that information to go through together here today, together. So if we take a look at the overall positioning here, you can take a look here and you can see everything from, the bearish side of positioning is more bearish on things like the Russell, 10-year Treasury bonds, Japanese yen, and Canadian and Swiss franc currencies. So on the flip side, we have things that are most bullish by institutional proportions, and you can hover over this. You can see that they're very long gold, oil, GBP, silver, dollar, and we could see that those are kind of your most bullish overall symbols on the net positioning for the commitment of traders data. Now, again, this is big money reporting their positioning overall to the CFTC. We take that information, which is a huge, terribly ugly text file, and we generate this report using software. So my company, A1 Trading, builds tools for this. And by the way, if you'd like to try out this tool for 30 days, we're going to leave a link in the description down below for where you can get 30 days access to the tool, and you can try it out to see if it is a good fit for you. So if that's something you'd like some more information about and you'd like to use this tool, the link will be in the description down below. This is the A1 Edge Finder, which is my company's kind of primary product that we sell, which is tools or software tools for traders looking to incorporate fundamentals. Now we'll move on to the week-to-week filing, which I thought was really interesting. What we can see here is that on the most bought things on a week-over-week basis, we've got some interesting stuff to discuss. The Dow Jones saw a lot of buying recently. The Russell saw a ton of buying recently, which makes a lot of sense with interest rates coming down or expected to come down. We also have GBP, USD, JPY, and the Nikkei. These are some of your most week over week bought things by institutional money, which is definitely worth paying attention to. We can also see that on the flip side, they sold gold, silver, platinum, US 10-year Treasury bonds, and the NZD, or the New Zealand dollar, which has been under fire recently if you're a currency trader. So we have all these things being sold and all these things being bought. I would say that generally speaking, on the equity side or the indices, right, the Dow Jones, the Russell, and the NASDAQ, we saw more aggressive buying than selling, which is definitely worth mentioning if you're a indices trader, which I know a lot of you guys love your NASDAQs and your US 30s and stuff like that. And then on the metals side, we saw more selling. And I want to discuss this because, again, this latest round of news has been pretty interesting for the financial markets. Stock market is up today because, again, with Biden dropping out of the election, there is a strong chance that we do see Donald Trump taking office again for a second term, mixed in between Joe Biden's term. But the concept here is that why is this good for stocks? Well, the common knowledge for the Trump administration campaign is they want to cut taxes for corporate America. And if that happens, it means more money in the pockets of businesses. The theory there is that they could then go hire more people, that they could also employ more money into research and development, especially in like the semiconductor space, and the AI trade could theoretically keep going if we see these companies continue to really invest a ton of money into reinvest money into the technologies. Again, I'm not here to debate whether or not that's right or wrong, because you could also make the point that that money will probably just go back into stock buyback programs, meaning these companies will take that extra money and just buy back their own shares, making stocks go higher, which is not necessarily the best for middle class America, because they don't feel that same effect as they have a lower amount of money usually invested in stocks. That being said, I'm not here to debate. There's a good case for both sides. My point here on this channel is to discuss what it does to markets. And it does make sense that this would drive stocks higher here Monday morning, because again, a Trump victory would probably mean lower tax charges to big businesses. That being said, there's also a very important macroeconomic front that we could discuss as well. We've seen on the top setups page that the indices are very bullish overall. You've got the Dow Jones, the S&P 500, the NASDAQ, and the Russell. All four of our U.S. indices are on the long side when it comes to the Edgefinder's top setups page. So I am bullish on all of them. I really, specifically, I like the NASDAQ, and I do like the Russell as well as possible setups. And we go take a look at those charts. I am already long the NASDAQ, as I've mentioned. And on the Russell front, I'm looking for a pullback down into this 2100, 2120 level, which is a 61.8% retracement from this big spike up that we saw during the interest rates, dropping hard on CPI day and the follow through that happened there. If we get a pullback, I am interested in possibly taking a position on that. I am also long or interested in taking a long position on the Dow Jones if we see a pullback to this 40,000 level. So overall, the trade that seems most obvious to me right now, at least according to my system, is being long the indices if I can get a good pullback and I can manage my risk appropriately. So a couple things that I'm watching. Now, gold is also getting a bullish reading, but I have to discuss this because the kind of uncertainty of the election, in some cases, you could argue, has been a little bit taken out of the picture, because now it seems like a pretty solid chance that Donald Trump is going to win, so that uncertainty might be taken out of the picture. Also, one thing that I'll mention, and oil prices are also down here today. We see, oil, silver, gold down. This could be a little bit of a again, I have to get into these topics, are unfortunate to discuss because people always get upset about it. But if you do see Trump winning, at least on paper, they are seemingly want to try and end. They seemingly want to try and end wars that are happening, like in Ukraine and Russia. And whether nobody wants wars, not the Democrats, not the Republicans. Nobody wants wars per se. War is bad. People die. That's terrible. But the aggressive stance on wanting to end that war and different mannerisms, different approaches, maybe the market is thinking, well, if war is potentially more likely to end, if spending dries up for Ukraine, if that's something that the Republicans want to try and push, what that could lead to is the demand for oil decreasing if wars go to peaceful. And also at the same time, the administration seems to want to really harvest a lot of natural resources, iron, things like that in the U.S., as well as oil prices could go down because more pumping could continue in the United States. That's also why we've seen clean energy stuff get really hit recently. This is NextEra Energy. This company has been taking a little bit of a dive, but also specifically like the solar ETF that I follow, TAE. yen has really taken a big hit. We can also see that the China relations could be under pressure, and that's why we've seen FXI, which was on a really big bullish move. This is the Chinese stock market, by the way, large cap ETF. It was jumping strong, has really come down. That's a pullback of around 10, 12% already off of this recent news. So I don't know, we'll see, but some interesting stuff forming there. The dollar index is also interesting right now as we see it coming back above that 104 level, which was a huge level of support, broke to the downside, and seemed to have been kind of a mini false breakout here. I actually would not be surprised if we do see a little bit of dollar strength in the short term as prices continue up towards that 105 level. But overall, I am still bearish on the dollar and think we do have more downside, whether it be sooner or later. I'm personally not betting on the long side. I am definitely more positioned for the short side of the dollar index, and we'll be looking for setups myself inside of our Discord channel. By the way, if you're not in our Discord channel, there's a link down below in the description. Actually, while I'm at it, there's a lot of free stuff that's down below in the description. If you haven't taken a chance to look at that, check it out. I just redid the descriptions this past weekend, so you might be able to find some good free stuff in there that's helpful to you. Speaking of which, you can also sign up with brokerages down there, which will allow you to trade directly on TradingView, and each one of them has like special sign up perks available to my audience that we've worked out on behalf of you guys. They are affiliate links. Please note you'll be supporting my channel if you use them. But again, the description's got a bunch of great free value for you, so check it out and see if you find something that's helpful to you. Thanks for watching, guys. Have a great day ahead. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.